Now we will review some CPA problems from Module 1 and 2. First question. Firm, a non-governmental not-for-profit organization, is preparing its year-end financial statements. Which of the following statement is required? So here you can review different parts of a not-for-profit's financial statements. You already learned there are three major required parts of the financial statements, which are statement of financial position, which is just like a balance sheet that lists all of their assets, liabilities, and the difference, we call it net assets. Then statement of activities that lists all of the revenues and expenses, and the difference, we call it changes in net assets. They also prepare statement of cash flows. In addition to these statements, all not-for-profit entities need to show their expense classifications. Either they could show it on the face of their statement of activities or as a separate statement, which you know it's called statement of functional expenses, or they can also put it in their notes. Of course, in addition of these statements, they also need to disclose additional information in notes. So, which statement is required here? Statement of changes in financial position. Well, they prepare statement of financial position, but it's not called statement of changes in financial position. So it's not true. Statement of cash flow. Yes, they have to prepare a statement of cash flow. And the title of the statement is correct here. Statement of changes in fund balance. Remember, not-for-profit does not follow the fund accounting anymore, and they don't prepare any statement related to the fund balances or changes in fund balances. Last one, statement of revenues, expenses, and changes in fund balances. This is also not true. They prepare statement of activities to show their revenues and expenses. So the correct answer is B. Next question. Stanton College, a not-for-profit organization, received a building with no donor stipulations as to its use. What type of net assets should be increased when building was received? Of course, here net asset without donor restrictions. Remember, if you need to record this journal entry, you have to debit building and you have to credit contribution revenues. Also, this format is as an asset format. It's not cash contribution. Still, it's a contribution revenue, and we're going to classify it under net assets without donor restrictions. So, of course, their net assets without donor restrictions is increasing. So, of course, A is correct. Net assets without donor restrictions. Net assets with donor restrictions. No, the receipt of this building will not affect net assets with donor restrictions. Board designated net assets. No, it is related to the donors. The problem does not say anything about the board, so we cannot say anything related to board designated. So the answer is A. Now, if we see the next problem, it says, at the beginning of the year, Baker Fund, a non-governmental not-for-profit corporations, received a $125,000 contribution restricted to youth activity program. During the year, youth activities generated revenues $89,000 and had program expenses of $95,000. What amount should Baker report as net assets released from the restrictions for the current year? Remember, they initially received a donation $125,000, and that time it was received as a contribution revenue with donor restrictions. Now, they use a portion of it. They used $95,000 from that contribution revenues. So, before spending it, they need to reclassify it. That means they need to transfer it from with restriction to without restrictions. And of course, this transfer will increase their net assets without donor restrictions, and then they will actually use or spend it. At the same time, they received some revenues. The program or activities generated some revenues. It's some sort of service revenues. So the question is, what amount should Bakir reports as net assets released from restrictions for the current year? So they released $95,000. So the correct answer is $95,000 that they released from with restriction to without restriction. Next question. In its fiscal year ended June 30th, year 1, look at the date and timing. Fiscal year ends on June 30th. And in year 1, whatever the year 2020 or 21, Bar College, a large private institution, received $100,000 designated by the donor for scholarship and superior students. On July 26, year 1, Bar selected the students and awarded the scholarship. How should the July 26 transaction be reported in Bar's statement of activities for the year ended on June 30th, year 2? So, June 30th, they finished 1 year, and the year 1 finished, fiscal year closed. Now, it's asking about June 30th, year 2. That means that year they awarded some students for the scholarship. So what they're gonna do? In previous year, when they received that amount, 100,000, that actually was a contribution revenue, but that time it was with donor restrictions. So before giving or awarding the scholarships, they will reclassify or they will release or transfer that fund or amount from with donor restrictions to without donor restrictions, and then they will give the awards or spend it. So what will happen here? First, they will actually release that from with restriction to without restrictions. So there will be an increase in net assets without restrictions. Later, they will spend it. They will pay scholarships and awards, which is, of course, treated as an expense. So when they pay those scholarships and awards, that will reduce their net assets without donor restrictions. So answer option number A is correct. It will be a decrease only in net asset without donor restrictions, that's fine. But at the same time, before decreasing, the net assets without donor restrictions will be increased because of the release of that amount from with restriction amount. Now, by footnote, no, it's not a footnote. You have to record and recognize it. Not reported, it's not correct. Then, the following expenditures were made by Green Services, a society for the protection of environment. Look here, their mission is to protect the environment. Now, they have few items here: printing of the annual report, unsolicited merchandises sent to encourage contributions, cost of an audit performed by a CPA firm. What amount should be classified as fundraising cost? In that statement of activities, remember we classify our expenses into two categories: program service and supporting service. Program service is related to their mission. That means anything if they spend for protecting the environment, that will be their program service expense. If they think any other fundraising or administrative expenses, we'll call it supporting service. Now, we will figure out how much we can say here as fundraising costs. So looks like all these are supporting service: printing annual report or sending merchandising to encourage contributions or donations, or paying an CPA firm for their audit task. All these are supporting services. Supporting service could be either administrative or fundraising costs. So here you see The merchandising they sent to donors, potential donors, 25,000 is directly related to their fundraising activities, right? Sometimes we also received beautiful pen or sticker with your name and address that you can use for mails or any other small merchandising to encourage you to donate and contribute. So here that would be the fundraising cost. Here, fundraising cost is 25,000. Answer option is C. Next question. The Jackson Foundation, a not-for-profit organization, received contributions in year 1 as follows. Cash contributions of 500,000 without donor restrictions, cash contributions of 200,000 with donor restrictions, with specific requirements relative to the acquisition of property. So they have two cash receipts, cash contributions they received, 500,000 and 200,000. Now, this question is related to your statement of cash flow part, how you're going to categorize it. When you receive any cash contribution without donor restrictions, it will be under your operating activities. Now remember, if you receive any cash contribution with donor restrictions, it will be under your financing activities. Now here, it may sound tempting that they are keeping that fund or donor restricted that fund to acquire some property. Sounds like some investment activities, but not. Remember, any type of cash contributions that comes with donor restrictions will be treated under the financing activity parts, no matter what type of restrictions imposed by the donor there, it will be financing activity. So of course this 500,000 will increase their operating cash flows, and this 200,000 will be their financing activity part. So the answer here is C.